the screen clearly, and can you hear me in stereo at least on your left and right speakers? Can you hear me clearly? Okay. Uh, there's a slight delay. I think it's part of live streaming, about 10 seconds. So the interaction may not be as fast paced if I were to be looking at the chat. So, anyway, that being said, well, no ads on Vimeo. That's a good thing, isn't it? No ads. I don't have to be subjected to AI judgment. And, well, hopefully it's much better in terms of well, I hope the bandwidth's not too bad for you. The entire viewing experience is not too bad for you. I paid some good money to be using this platform, so let's just test it out. I think it will be beneficial for us. Okay, we'll make it quick today. There's a couple of live stream, one for members and subsequently later for lifers. I will post a link in the lifers channel here, so you won't miss it. We'll have a short one later, just some housekeeping. If you are wondering what this is, I will explain that in due time, probably not here, in due time. Let's just take a look at the charts. That's what I want to do today. Well, let's take a look at Friday first. Yeah. If we take a look at Friday, this comes very interestingly. There are a few things I want to teach you about on Friday. I'm running through the live analysis as well, so you can understand my thought process and be able to make some good money as well by learning this. The audio, it's not too bad, right? I mean, is the volume all right? Well, just do let me know if you encounter any problems. Getting better at this, I think, but I need practice. I'm still completely new to this, but I will improve. I will learn. That's my journey. That's my duty. Okay, Friday. There are several things I want to teach you. And if you remember last week's live stream, I taught you something about the final 10 minutes. There's something here I want to teach you as well on Friday's final 10 minutes, as well as on Thursday as well. This is also quite important. There was a comment about somebody mentioning that they don't have the time to trade in the morning. But you see, what I'm trying to teach you is to learn to find profits in the charts. So you can find your own profits at every time in the day. Now, you probably don't have to be looking out for safer setups. Some of you may even be able to make money just within the algorithms. In this case, support resistance within the algorithms. If you are able to trade with some level of finesse and well, obviously understanding your entries and your risk management, you still can be able to find very good profits in the charts whenever you want to. And I overtrade sometimes to prove that point. So I did that on Thursday to prove a point. But on Friday, I only took one trade because I was mostly away for the rest of the day. For the big part of the day. So I only took this trade here, which I will show you later. And obviously there was a very nice final 30 minutes trade as well. So let's talk about that as well. So you see, it's all about understanding how to be finding profits in the charts and according to your comfort level, finding your own setups, using the algorithms and using structure. So you have to understand how to be doing that. let's take a look at Friday now. Now, Friday, I think the biggest part of Friday for you, if you're looking at my analysis, before I left for a long extended time away, running some errands on Friday. So thank you for your understanding, right? So 1019, I think most of you are bewildered how this yellow algorithm came about, right? And you saw it just happen as it forms. Now 1019 was, if I want to be a little bit more precise, it's this particular candle here. This is 1019. And by 1019 or even earlier, because it takes me about a minute or two to identify the yellow algorithm right here. So you see, understanding this is important, extremely important. This is also not the first time you probably see it's happening. Now, at the start of the day, I want you to understand this. You have to only trade as structure demands. No structure, no trade. And you realize that most times when, in this case, we identify the pink algorithm. If you're able to catch the early trade here, that's great. You manage to see that there may be some form of buying algorithm here that started forming early for you. Now, will I have caught this trade? Probably not. Too much early algorithms here that's still not identified. But that's fine, even if you don't. Right? So you have to purge that desire to want to catch a trade as quickly as you can, thinking that you're missing out. It's easy to get lost in the 1 minute candles, especially at the start of the day. Right? If you zoom out, you see a clearer picture. But at market open, especially with the candle just running through and you don't have the habit of establishing your ranges, and this is something that you should do if you're a newer trader. There's a reason why there are grids here, right? You're on the background with grids here. So you have to understand what is the range of each candle at the start. It's easy to get lost in the candles, especially in 1 minute chart where nothing shows. It's just a black canvas and the candle started showing. If you're too zoomed in, you see the candles move large because you're zoomed in, right? And you have this false expectations that there are big moves that are going to miss. You see, that's exactly the problem, right? And you start forcing trades. You start taking trades thinking that you're not assessing your risks. You don't know what the range is, and you're taking a trade. Can you imagine that? Can you imagine taking a trade without structure, without understanding your risks, without understanding even the range of the candles? Now, you don't even know if a single candle, if it turns red or green, it's going to be a 0.5 point or 1 point candle. You have to understand that. And when you are able to understand that, by establishing a range. So the first thing I do, market opens, look at a range, right? Your first candle, this was a scary candle, right? So this was 0.7 points. And you understand, oh, wow, the range is about 1 point at the start. I can get good profits, 1 point, 0.5 point, remember, as I tell you. But my only challenge here is if I were to be taking trades at the start of the day, I will be taking something closer in the money so I can enjoy the intrinsic value. So if this goes up 1 point, I will enjoy a strong delta, 0.5 to 0.8 delta if I go deep in the money. Now, if you don't understand this, that's fine. I will have deeper explanations of these technical details that I'm talking about. I can't do that here. The video will be 3-4 hours long and it's going to be slightly disorganized. So if you don't understand something, they will come in more explanation tutorial style video next time, right? All right, so bear with me, right? Just try to absorb as much as you can. You can rewatch this later. This will be well, this will be recorded for you to view later. So anyway, now understanding this, right, you can take something in the money, so you can enjoy the intrinsic value, in this case the movement of the chart start of the day, right? As the day progresses, you will take something that's slightly more out of the money or within reach, and that's very important. You understand the algorithms and the possibility of that expected range that may happen. So I will talk about that, right? So the first tip here, understanding your range. When you understand your range, you will not overtrade. You will allow the candles to start forming before you identify structure. So I wouldn't have caught this, not yet, not until I establish that buying continuation structure, and in this case the orange started appearing, and so this helps. From this, what can you gather from this? Just these lines and these candles up to this point at 10 a.m., right? What can you gather from this? This is when you start creating context and narrative for yourself, right? You understand, firstly, that you see this pink is a bullish control that's building liquidity. You understand that. And secondly, you see that the orange is a buying continuation that broke out from the pink. Now it helps that there is this large wick here, right? This is important because this wick here helps you understand that the pink and the orange has turned into some sort of support to build liquidity on the way up. Now, when you can understand this, you have confirmation on these algorithms, and you wait for these algorithms before you start taking the next trade. Unfortunately, you take a look at this and there just isn't any strong structure that continued its way up here, right? And that's absolutely fine. So there is a possibility that if you missed this early pink building the liquidity here, and there's nothing wrong with that, because this move here, right, you have to understand this move here. Let's take a look at 30-minute chart. It's here, all right? When you can understand this, you will see it better, because this move here is a buying continuation structure from the previous day. And when you can understand that it came from the previous day, you will not be too fixated on worrying about missing this trade, because this is a continuation from the previous day. That's why you see the gap up, right? Although we had some selling at the start of the day, right? Sorry, I should have zoomed out, right? You see the gap up because of that. That's a little lagging for me, so I apologize. I try to avoid zooming in and out. It's part of the screen capture, I believe. So it's a little uncomfortable for me here, but I try my best for the annotations. Now, when you can understand that, you do not feel that you are missing out on this trade, right? And a lot of it, it's your psychology, right? Because this is just part of that green buying that broke out from this that has started forming prior of that 5-day moving average that bounced up. That's fine. That's absolutely fine. And if you don't force trades here, right, because if this keeps climbing up without structure, that's absolutely fine, isn't it? Right? The next structure that may start forming will be that pink algorithm that started forming right here. Right, so if this starts to build liquidity like that, yeah, pretty good position to go long, because you already identified pink starting to build liquidity here. And the market started building liquidity here. So this is your target if you want to go long. Further long. Understand that, right? So you will avoid getting into a bad position, and thereafter you realized because of the bad position, you missed the selling. Understand that logic there. So a big part of not trading, not putting in a trade, it's twofold. Firstly, you avoid the risk of entering a trade that may be wrong. And secondly, you avoid the potential of missing the next trade, which is more lucrative than the one that you forced yourself into. Right? So never force trades. I'd rather you be on the sidelines and waiting than trying to force a trade and missing the actual trade that will happen. Now, psychologically, that's not great for you, because if you're wrong once and you forced another trade because you thought you missed it and you got caught because of your lack of analysis, because of your conflict in your mind, and you got your second trade wrong too, you will get your confidence battered and you will lose all ability to analyze. And that's it for your trading day. So understanding that, you have to keep your mind as clear, as pure as possible. That's what you need to intend to do. Now, this is a game of focus, because trading, apart from all the technical knowledge that's presented here, well, I always say trading makes you a better person, isn't it? How do we define that, a better person? It's actually quite simply defined as making good decisions. Now, you're a better person when you are able to make wise and good decisions in your life. Likewise with trading. Now, it's all about having that clarity of mind, that purity of heart, to be able to make good decisions, not just once, but consistently. And that's what you need. You need that focus in order to do that. So, understanding this now, right, you see this much clearer. So it's all right to miss this trade because you realize the bigger trade came later. Yeah. Now, when we lagged buying continuation, and this is a very common setup. So the first trick that I'm teaching you here is understanding how to be establishing the range at the start using the candles so you don't feel like you're missing out. Secondly is establishing the algorithms. Obviously, we established the orange and the pink, orange breaking out from the pink. And thirdly is understanding if there's no structure, there's no trade, there's absolutely no structure here. Maybe one here, right, breakout, retrace, maybe. Now, even if you caught, that's the beauty of this, isn't it? Even if you caught this small chunk here, right, this is, well, still half a point. I could easily make a few $1,000s here, $3,000 here, just from this very simple move here. So it's about scaling up, right? You have to be very mindful of how to calculate your profits and how to scale accordingly. So make good use of what is available to you, and you are in control. How much you make, how much you lose, you are in control. That's what it means by scaling up, as long as you are in control. So if you see a possible trade, you want to take a trade, make a few thousand, that's fine too. This is viable. And that's the beauty of trading in the stock market with high liquidity, because there's literally hundreds of billions of dollars right here. All you need is to scrape the bottom of the barrel. That's what you need to do. So you have to learn to manage your expectations firstly, and manage your risks, and know how to find profits in the chart by understanding the precision, because only with precision you are able to manage your risks, right? Now, let's see now. No reason to go long, because why? No reason to further go long, I mean. Because firstly, you don't see the bullish control in this case. We established the bullish control as your pink, and your teal. Teal is a little too strong for bullish control. Now, if I were charting a little bit more aggressively on a Friday instead of rushing for my errand, I may chart another blue here. So this will be a very nice bullish control together with the pink instead of this teal, which is a selling precision algorithm. Right, once again, all these jargons, I will be organizing them, having tutorial style videos in future to explain them. At the minute, you just have to absorb whatever you can. And if you are in the analysis long enough, all these jargons are, well, kind of our secret language now, isn't it? So that's between you and me, all these secret languages. You understand exactly what I'm trying to say or mean. That's what happens when we become old couples, yeah? You understand what I try to mean or say because we've spent so much time together. We literally spend a lot of time together. You chalk it all up. I think you spend more time with me than your parents, some of you. Well, so be it, yeah? Now let's take a look here again. No reason to go long because you don't see the bulls building liquidity. You have to understand that it's all just buying continuation. And in this case, this buying continuation is actually weakening. Can you see that? When you understand tapering, and this is it, right? Because we identified the magenta quite early on, and we are able to see that it has started tapering here. Now, you have to be very careful because tapering could be a form of confirmation bias. You tell yourself it's happening, but actually it's building liquidity for the bulls. Many a times they are competing, I would say. They are not really conflicting. They are competing algorithms. In this case, you see that the bulls could still be building liquidity with the pink, isn't it? Even though it is tapering. But there is just one more tapering algorithm here that gave me quite good confirmation that this may be heading down, right? And therefore you see my analysis here that I gave at this 1019, and once again 1019 was here near the top, and I specifically mentioned that there is bearish liquidity here, right? How do you establish that? Well, nothing new, because tapering is a concept that you have learned in your time here, and this is nothing new to you because you see orange tapered to magenta, tapered to yellow, right? And we have built some bearish liquidity here. You see it happening, right? The yellow and the magenta was starting to build liquidity here as well. Just take a look at the magenta. See this? This is bearish liquidity. Understand that, right? So this is bearish liquidity because the taper already started to happen before the bears allow the bulls to grab the price at a higher point before they decide to sell. Now understand that. So you can just have this visualization. Just visualize this with me. The sellers, knowing that the bulls are in control here, decide to stop selling. And so the bulls went under push all the way up, and then they decided to take the selling order. So let's say there are, well, okay, this is just a very, very broad example. Don't mind me, I'm trying to simplify this so it's easy for you to understand. But economics is not like that. For every one buyer, you need to have one seller in order for you to print a candle. You understand that, all right? But I'm trying to make it a little bit easier for you to understand by using imbalance. So say there are 500 buyers and 500 sellers, okay? Now the sellers here saw the buyers are still there, and they decide, oh, I don't want to be selling at this price anymore, and they canceled their orders, and they decide to sell it here instead. And so they allowed the buyers to start buying it up, going up in this orange algorithm here. Then they re-entered into the market by starting to sell at a higher price here. So they re-entered into the market here. And by then there will be less buyers, because higher price, less people want to buy. But yet at a higher price, more sellers start to appear. So you realize there are more sellers now, maybe double, 1,000 now. And this is why you have that tapering and that breakout here. So understanding that, now, so there are a few concepts here, right? So first concept is that buyers prefer to buy at a lower price, sellers prefer to sell at a higher price. That's the first very, very basic demand and supply concept. And the second one is you have to understand that sellers can cancel their orders here and allow the buyers to buy it up higher before they start selling again. So that's the concept of why you see heads in the head and shoulder pattern, right? Because if you're a seller and you know that there is very thin buying here and that there is a chance you can sell it at a higher price, just allow it to sell at a higher price. Why not? So you just cancel your sell order and you start selling at a higher price. You still can bring it down later on. Right, once again, a very simplistic example for you to be able to visualize, because it's a lot harder than that, because every print is one buy or one sell. You have to understand that, right? So I'm trying to illustrate the imbalance, but not in fairly accurate way. Okay, when you understand that, this is why you have your head that's forming, but yet glimpses of the sellers building liquidity. So what I'm trying to teach you is the concept of liquidity building. There are ways to interpret this into the order books. There are obviously harder techniques, but now you have to keep it simple. The thing about trading is this: it's wildly complex, and you cannot learn everything. You think you can, but you cannot. So you have to keep it simple. The simpler it is for you, the more you unlearn, and the more you keep it simple, the more successful you will be. Your edge is not in understanding more, because it's impossible. Now, your edge will come in understanding more of yourself and less of all the complex things that will confuse your decision making. Now, does that make sense? So you have to keep your decision making as clean and as clear as possible, because sometimes you have to make a decision literally in microseconds. So you can't be depending on too much information, because you don't have the ability to do that. Now, if you're doing larger trades, longer trades on a daily chart, for example, right, my usual swing strategy between your Bollingers and your moving averages, fine. This one, you can afford a lot of time to start planning your approach. But if you're day trading, you're literally taking seconds, right? So you have to understand that. I see some questions about your buyers and sellers. Now, I will cover that in, once again, tutorial videos about structure, about patterns, right? Cup and handles, head and shoulder patterns. These are all just understanding demand and supply. And understanding demand supply means understanding, now, not what you read online, demand and supply zone, all these things. Now, I used to cover them because they were keywords on YouTube. That's how I started, right? If you only had 100 subscribers, you have to depend on keywords from other people, right? So understand that. I have often mentioned that I don't like it because of the large range of stops that the demand and supply zone gives you. It's just not ideal for trading. But demand and supply is an economics concept, right? It's about number of buyers and sellers. And when there's higher demand and less supply, up and down, it creates an imbalance. So understanding that. So what I'm trying to teach you from this is understanding how to see sellers building liquidity. Now, in this case, the seller was here, right? There are sellers here, but the seller has decided to sell at a higher price because in this case, the orange is still dominant with glimpses of that magenta and even yellow, right? I saw a small glimpse of yellow here, right? And you see that happening. You don't have to identify the yellow so quickly because you see later on the yellow appeared anyway. So you don't have to, once again, I talked about this. You don't need too much information. Keep it clean and clear for yourself. This is clean and clear, isn't it? Right? So you don't have to worry about identifying the yellow here. if you can identify the yellow here and it became more meaningful to you, right? Because if you identify the yellow here, you may make a wrong decision. Okay, now understanding that is paramount, because the yellow only came in effect much later, not here. So this is what I mean by trade what you can see. Because if I give you too much information and you cannot see it, you will make a terrible trade, because you're using information that you don't understand to base your trading decisions on. But if you can't see that trade, then all the information is relevant to you and you can make a decision based on all these relevant information. So trade what you can see. That doesn't mean I don't chart this yellow. I have to do that, isn't it? Because firstly, there's learning value in that. But if you treat this like a signal group, you will be in trouble. That's what it means. So your mind has to start conditioning yourself to be one of learning and to be one of understanding your limitations and progressing from there. So trade only what you can see. And that comes with purity of heart, isn't it? If we come to the trading floor with ego, with greed, right, with skepticism, you're going to be in trouble because you are confusing your own trading decisions. So for those who are skeptics, that's fine, because you will have questions. For those who are trying to understand this, yes, you will have questions, and you have, most importantly, time to learn, right, and resources. And I'm here almost every day. You see my analysis. It's live. I delete nothing, and I explain as much as I can. So take your time. And most importantly, you have to understand clarity of mind, purity of heart. Keep it simple. Trade what only you can see. Now, this yellow algorithm is beautiful, but it's not sufficient without the magenta. This is why I had to draw that magenta right there, right? This magenta here, I had to draw it. So when you understand the magenta, it becomes so much better, because you realize actually, as much as the yellow, it's pretty good, because the yellow gave us a context of tapering, but you realize it's the magenta that gave you the precision for this trade here, right? And I mentioned somewhere, where was it? What did I say? I said that you short this only when there's clear precision that's activated, right? Now take a look at the precision algorithm that started for me. By the third candle here of the selling of the red candles, you would have already identified the teal that's selling. And so once a large candle came, we broke out of that, especially once this was a previous support and this has turned into resistance. This would have been a beautiful entry of that teal and magenta right there. Right, so you understand that. So even if you miss this, you had the breakout, retrace, and the retracement is penny perfect. Just take a look, right, before it started heading down. Now, once it started heading down, if you were to be charting, I wasn't around then, right? But if you were to be charting this, you would see for yourself how beautiful this is. Can you see the dual algorithm setup here? Take a look. Dual algorithms here. Nothing new. This is nothing new. You have seen this before. Dual algorithm setup here. You see that the yellow has been taking control on the right shoulder here for the nested right shoulder all the way down. So there is another trade here as well. Now this one is good enough, I tell you. This is probably $10,000 for me. Easy. This is a 1-point trade right there, especially with the large candle here. I'm going to get banned for saying that, isn't it? But I'm not on YouTube, so haha, who has the last laugh now? But anyway, I can't understand the AI doing all these judgments. Right. Anyway, it's substantiated. I do this every day. Some of you audit my trades, right? If you don't already know, my trades have timestamps to the second. You literally can audit them with time and sales, and to see if my trades are truly passing through a real exchange. Yeah, all right. Many of you do that, right? So I do this unabashedly. I have no worries because we are above the light. Remember last week's live stream? I talked about being above the light. There's nothing to fear. When you have nothing to fear, you can progress. You can find progress in your life, right? So, okay, I digress. Back to this. So understanding this, you see the structure, right? And obviously, the teal carried on its continuation, right? Teal is here. Look, it's still there, right? And by then, you would have already protected. Remember, there was this previous live stream too. I think it was last week. So much to teach you, yeah? That I mentioned because your eyes, right? I want you to see the 1 minute chart as your visible refresh rate. And so when that 1 minute candle is in your favor, you have to protect it. That's your best form of defense because that's your immediate refresh rate that your eyes can visibly see and react to, right? You don't wait for the second candle because every time a large candle comes in my favor, I protect it. I'm fine. I'm always fine for the trade. I will never lose in that trade. So take advantage of that, right? Because you don't know what the second candle is going to happen. It may engulf you completely and you'll be caught by surprise. So this is known as a refresh rate and it is as good as it gets. A 1 minute candle is as liquid as it gets on SPY and the move is as accurate as you can get. If you go to a second chart or tick chart, you will not be looking at candles. You'll be looking at dot plots, right? And you will not be able to understand how to protect or understand how to be looking at volume together with the candlestick. Now, the beauty about the candlestick in a 1 minute chart, now 5 minute will be too large because it's very rarely you get a large 5 minute candle, right? That's formed immediately because within that 5 minutes, you will have so much risks to undertake. So you have to understand 1 minute candle is beautiful because it also shows you how much volume there is, how fast it moves, and the size of the candle. It reflects the volume. Now, this is a dead chart, right? It's not live. You can't see the momentum of each candle, so you cannot appreciate the volume of the candles because the movement matters. And I also mentioned this as a tip. Open up your options chain. You also can see the movement of the options chain. Once the numbers start moving quickly, you know that volume has kicked in. So these are small tips that as you train your more experience, you will learn to see it. You will depend on less complicated instruments, even volume, right? I just have to look at the candles. I can have an estimation of how strong the volume is. Now understand that. Good to go, right? So treat this as your refresh rate. For those tech geeks out there, you understand it means that there are certain resolution as it gets deeper, your eyes cannot visibly register them. So likewise, a 1 minute candle, if you see a large 1 minute candle, you protect it, you're safe, right? That's as good as it gets visibly for your eyes to register. So beautiful trade here with the yellow. And if I were to zoom out and you understand the concept of that bearish liquidity, do you see? Unopposed, completely unopposed. And this means that the bears are building liquidity here. If you were to chart the yellow again, right here, of some of the key wicks here, you notice that it is unopposed. Right, okay. Now understanding this, you look for selling continuation structure, right? Because the bears have already rejected this range. And so if we do not even get here, you don't go long. Unless here, of course, I'll talk about that later. I can't talk too much about this on hindsight because I wasn't around, right? But I will do that in a future video if I have to teach, if I'm not trading. But I want to cover something more important. So we're already 45 minutes in, which is the final 30 minutes trade that I took. Right, so understand this. Right, I probably gave you 7-8 tips that you will never learn anywhere else. Okay, let's take a look now. Final 30 minutes, right? Okay, understand. Firstly, final 30 minutes. Some tips here, how to trade the final 30. Always firstly identify your liquidity wedge. Now, we identified liquidity wedge here. This was 314, yeah? Okay, 314. Now, understand 314 is here. Now, you have to firstly understand your liquidity wedge. And when you can do that, now you will be more careful. Because this is your range. When you understand your range, and just if you charted the yellow here, this is clear as day. Beautiful, beautiful liquidity wedge that started forming. When you understand your liquidity wedge, you understand where your possible ranges are, because your final 30-minute is very dependent on your strike. Now, there's something here that I want to talk about later. I will talk about that. Just a visual reminder for myself. You have to understand the point of your final 30-minute trade is to take a strike that's slightly out. So in this case, say the chart is here, okay? So the spot price is here. I just do this for illustration's sake. The spot price is at 685.6. This is the spot. You want to take a strike at 685 and hope it gets in the money. When it gets in the money, you will make a lot of money, right? Understand that, because it will be able to make intrinsic value. Final 30 minutes, your options, especially 0 day to expiry, is no longer having any extrinsic value, no more time value, right? So the only value you can get is if it gets in the money. When you understand that, you can even calculate your profits, because intrinsic value is basically the price. So for every cent you go in, let's say the market closes, you have a 685 put, and the market closes at 684.8, right? You make 20 cents. Understand that, right? Per contract. For SPY, obviously. If you're doing SPX, this is $2. Wow, $2 is $200 per contract. So you understand that. When you can understand that, you understand that even a 0.2 point move in the money is very beneficial to you. So this is understanding that the final 30 minutes is an intrinsic value play. When you understand that, then you understand why you need the wedge, because you need a certain understanding of the likelihood that it will get into your strike range. So when you can understand that, you can see, well, I can see this here. If I want to choose a strike, especially when you wedge to the end here, right, you have a clear sense, 1 point, half a point. Now, my advice to you, especially if it's within a very close range like that, is to take something that's just half a point out. Don't take 1 point, because the chances of it going 1 point in the money, especially in a tight wedge like that, it's very unlikely. And remember, once the direction is wrong, once it's not in a precision algorithm, in this case, the precision when it went down was this, isn't it? Once it's no longer in a precision algorithm, your value goes almost astronomically straight to zero. Okay, because the market no longer wants to buy something that will be worthless. Right? So you understand that, and you know how to be dealing with it. So in this case, you see the range here. And so I mentioned this because there are, once again, another tip here is understanding that there are certain targets the market wants to go to. Most of them are safety targets, which means the market wants to return back to safety. I use that very often. And I talked about a few safety targets here. And I want you to study Friday's analysis. Right? The two targets here is, what did I mention? Gap close and 5-day MA. Now, gap close is this right here, and 5 days here. Huge range, isn't it? Very unlikely, but If it's possible, and first few videos that I mentioned in the secret training videos, right? When you hear secret training videos are here in this daily brief channel here. Okay, now, the secret training videos, I told you to use the precision algorithms to extrapolate the possible trajectory of the trade. So you see, gap close with teal is absolutely possible within range. 5-day, very unlikely, because it's a little, if you were to chart this very clearly, 5 days out of the range from 4 p.m. where market closes. So it's already very unlikely, but gap close, what a beautiful target, right? So once it started selling in the teal, wow, this is my chance. I know maybe I can get an entry in here, right? And I did. I got an entry in. So you see, some of you, when you trade Final 30, you take a trade here and you gamble. You see the difference between you and I. You gamble. You hope that it goes up or go down, but you're probably going to turn worthless from there. But instead, I understand how to be using precision algorithm, and I understand the break of that structure, right? So technically, I mentally charted this yellow here, and I saw it break that yellow. So there is a chance that it may go down to a target if it continues into this precision algorithm territory, into a very safe target here. Let's take a look at my trade. 47. I took it even later at this break. Yeah, right? Break. I just want you to see this. I forgot to take any screenshots. I just took a photo just for my record here. This move here. Right, I want to make a very intelligent guess how much I made just from that trade. Let's see. There you go. I took a screenshot of, yeah. This was Friday. One trade, all right? One trade. So, understand this. Okay, when you can understand this, it makes more sense. Take a look at my trade here. Now, it makes more sense because I obviously, it's quite a big amount because of the intrinsic value that went in. Right, so understand this. On the break of yellow, I took it at 47. I took it at the break when there's some retracement, like that. Yeah, as it said, I almost tripled my account. It's just a small amount of my Friday gambling profits. Right, it's meant for gambling, right? That small account. Understand that, right? Just like that. Now, when it lagged, if you missed this trade, say you missed this trade, that's fine, right? Because there is another play here, which I also mentioned, which is the VWAP, right? Now, I talked about back to VWAP if it lacks continuation. And I just wanted you to see it went back to VWAP. Right, so this blue line here is VWAP, and we went back to VWAP here. Back to safety. Just take a look. It's a back to safety play because the market has no continuation. It prefers to go back to safety. There is an official term for this. This is just reversion to the mean. Right, now that's a very broad way of saying that. It's not that meaningful, that word. Sexy word, right? Makes you sound more intelligent than you are. But if it doesn't make you money, it doesn't matter, yeah? So you have to learn how to help you make money. And in this case, I call it a safety play. It helps you understand a little bit better. Yeah. Yep, simple as that. Now, if you're trading with, you are professional traders, right? If you're going to be making 5 figures in a couple of minutes, you cannot be doing it through your phone. You get what I mean. You have to have that focus. You got to have some professional tools. To me, my professional tools, a good keyboard and a good mouse. High APM, that's all you need, all right? Nothing fancy. I don't use hotkeys, to your surprise, right? But I have a very clear routine of how to have my stops in place and how to protect. So you cannot do them. Before you start your trade, you must already know what you're going to do to end your trade, right? So the entire routine must already been there. And when you understand that, you can perform all these actions even before the trade starts. You know exactly what to prepare for. You're always one step ahead of your own trade, right? Especially stopping or even protecting the trade, right? So practice. Get a good broker as well with good fills, right? Good fills are important, right? You need a broker that is not screwing you up. And I say that with respect, because you have to understand how brokerages make money. If you are not paying a commission for your trades, they're taking the money somewhere else, right? And that's from your spreads. And if they are taking money from your spreads, they don't have good liquidity to provide you with good quotes for your contracts. And so that's why you have difficulty filling them. So you want to be looking for a broker that's with good fill, fast fill, because they have liquidity and because they are transparent with their fees. So they don't have to play games with your fill. You realize if they don't have to play games with your fills, you fill more effectively and they take some commission off your concluded trade instead of playing around with your fills. So I use interactive brokers. It works for me. So choose one that works for you, right? Practice and try to get used. You need to have tools of the trade, a set of tools that you are used to, that you frequently train yourself in. And so when the battle comes, you don't have to worry about how to use your tools, right? All these will become second nature to you. It becomes a second set of your limbs that you can move them naturally. Okay. Quite simply, that's all I want to talk about. It's Friday's action because this is very important. I just want to quickly touch on Thursday, right? Just very quickly. My Thursday trades are all here now. You can take a look. I think thanks to TG for collating my trades here. Right here, Thursday's trade. Now, I just want to say about Thursday's trade here is that if you studied my trade, you realize the trades that I took here are very meaningless, right? Which is, I think about here, these trades here. This three trades here. Now, these are meaningless trades. This is a form of overtrading. And just take a look. How much risk do I put myself in for such poor returns, right? And you see the technique I teach you? Even if they are poor trades, you can never lose because you protect it so early, right? I'm always defending before I attack, because if you are proven right, if the market truly goes in your way in the strongest precision algorithm, you can add winners. For sure, you will always have opportunities to do so. But before you add winners, you have to get into position and be as protected as you can. Now, I want to talk about that trade that broke the yellow here. So now technically, yeah, now I don't need too much explanation here. Quite simply, we broke the yellow, right? And you had that strong precision in that teal and that even stronger in that blue that started appearing. Broke yellow, you look out for how to take a puts here. And I just want you to see my entry. I set alerts at yellow and I took a trade only on this green candle because I saw the blue started appearing here and the teal. Where are my stops? My stops are obviously at that teal and that yellow here, which is here. Well done. Good trade all the way down. Because you see, as well as I mentioned, huge volume that started coming in. Now, if you needed more confirmation, the teal started showing, selling early on, and we started breaking out in the yellow. So this is when stops start to get triggered, and this is when you start to take a trade. I came back for that trade only because my alerts were triggered. And as I mentioned to you, set alerts. Your trade will materialize. And if it doesn't, so be it, right? Because your alerts just means that this is a setup they're looking for and the market didn't give it to you, so you're not wasting time coming back to the market to overtrade and lose money. I've talked about this before. It's a mindset. Because we live in a world today where we have no consequence, no immediate consequence, so you don't learn. Right? Back in my day when I was taking exams, you don't just score for right answers, right? When you get a wrong answer, you get your score deducted. So there is a consequence. It's better to not answer than to give a wrong answer. You understand the difference with that. You don't get that anymore. Children nowadays don't have that anymore. You are not penalized for a wrong answer anymore. And that is a mindset you need to train yourself. You need to indoctrinate your mind to the point that you rather not take a trade than to be taking pointless, meaningless trades that will have consequences. And in this case, your risk is higher than your rewards. So understand that. And I believe it's a conspiracy, right? You train the younger generation to understand the lack of consequence so you can manipulate them even more. That for another time. Yeah, but we have a duty to, well, firstly, be of better character ourselves in order to impart that to the next generation. And these are the small things that you have to learn, that there is consequence in your poor decision. And trading reflects that almost immediately. So I love the idea of not immediate gratification, but immediate consequence. So you learn quickly. Trading gives you that. In life, you don't get that always. In life, your consequences always come too late when it has spiraled or snowballed into something irreversible. So trading's great. It's a great platform for you to build your character. Okay, I think I will conclude today. Quite a lot to learn. I did provide you with a lot more tips beyond just the technical understanding of the algorithms and the structure. So do please review this. I will be reposting this in the secret training videos considerably for week 50. And yeah, I will see you before opening bell tomorrow. I will prepare you. But I want to just give you a little update. So that's it for the technical analysis. Can you give me 5 minutes? Okay, I want to use the toilet first, and I'll be back. So thank you. Give me a break. Yeah, give me a break. See you in 5 minutes. but this is just some housekeeping. Right, firstly, I'm going to start a new channel here for 2026 commitments. All right, so please, for next week onwards, it's good that you review, you start to recalibrate yourself for 2026. It's good to review as well your 2025 commitments and whether you have achieved them or what has stopped you. What are the calibrations that you have to conduct on yourself? So that's quite important. All right. So that's first. Now, secondly, is understanding that. What about? You have to understand you're here to make money, right? So make money, please. Do your best to make money. It's not hard, because if there is a chance to make money, this is the best way to make money. My tip to you is don't get greedy, right? Because if you review your trades, which I do every single day, I want you to do that. Share your trades so I can review them, and I do this every single day. Yeah, I noticed one thing about most of you. Some of you pay $100 a month. That's the highest, and that works out to be about $5 per trading day. Can you make $5 per trading day? And you ask yourself honestly, if that means taking profits from one candle, you obviously can do that. Some of you just scale up too quickly, right? I see some of you making consistently $80, $90 a day. That's not too bad, you know. And then you start to overscale and you get into very big rate days and you cannot recover back. Some of you make a few hundred a day, and then you start to push yourself a little bit harder, take more risks without understanding why, and you get into trouble. What I'm trying to tell you is this. Focus on making money. Not make big money. When you can focus on making money, you are not in a rush and you will gain confidence. With confidence, you will learn. Your learning is accelerated. And believe me on that. It's as good as giving yourself a conducive environment to be learning. Now, imagine if you put yourself through a very toxic environment with your colleagues and your bosses. They're always demeaning you and shattering your confidence. You imagine that sort of environment. There's no way you're going to progress. So when you shatter your own confidence, you are creating a toxic environment for yourself to learn. So please don't do that. Be more mindful of creating a better environment for yourself with your trades. Don't scale up too quickly. You will get to that level, I promise you, if you scale slowly to get there. Scaling up too quickly is detrimental to you. I use myself as an example, right? I can never return to making a few hundred a day. Never, I can't return that. And because of that, I get bored. If I were to make little, I take unnecessary risks. And you can see how it has destroyed me in terms of my defenses if I wanted to scale back and make a few hundred again. But thankfully, I don't have to. But some of you don't have that luxury, right? Because you are not able to stomach that risk to make trades that can make you 4 or 5 figures a day. Literally, you cannot put yourself at that risk, even for me. Well, one of my advantages, I have liquidity, I have solvency, And you have to understand that. The more you make, and when day trading becomes just a small percentage of what you can make, you take the trade so much more carefree because you don't have that stress behind you. So one secret of my success is that I have liquidity. So get to that stage, and when you have liquidity, you realize that's why the rich gets richer, because they are able to maximize their profits and leverage even higher because they are able to. So scale slowly, you will get there, and with more money, you will make more money. That's what I'm trying to say. Now, if you give me do or die every day, I can only take one trade, and that's 100% of my account. I have no way to reverse the trade. I will never trade properly, right? Because the stress firstly gets to me, and I will never be able to understand how to manage my risks appropriately if one trade's all I got. I can get lucky once or twice. You get what I mean, right? And obviously, because it's a small account, I will not have that hunger because it's an amount that doesn't interest me anymore. You see, I've been spoiled by big profits. And so if you're a newer trader, you cannot be spoiled by big profits. When that happens to you, that's the worst thing that can happen to you. If you have experience making big money and you don't know how you got there, realistically, you are in trouble, right? Because it's so hard to unlearn that. The heart of greed will infest you. Yep. So understand this, and you have to put into perspective of your trade. Make money, right? That's my message to you. You have to make money, even if it's a little bit. You can make it sufficiently for you. You create that sort of scalability much later. Consistency, your risk management is extremely, extremely important. Don't worry about the big profits. I do this with the big profits not to ask you to make it within a week or two, but it's to remind you that it's worth spending your years studying and mastering this. You see the difference. But you will see my message if you have a pure heart and not one that's with greed. So I keep mentioning this, purity of heart and clarity of mind. So you can manage this even better. All right, so when you understand that, two things. Once again, 2026 commitment, I'm going to create that new channel. Make money, right? At least make enough to pay for your subscription. That's important. And if you can't, right, just write into me. I'm here to help you. But I will reasonably help you. There are people who don't even help themselves. I can't help you if that's the case. Right? If you're expecting me to help you when you can't help yourself, then that's unrealistic. So you have to understand that there's certain logical argument to that. I want you to be spending as much time as possible here with me, with everyone else, because that's the best way to grow. You will learn that you do not grow alone. You have to grow with a group of people. Help me make this place a better place, because you're here because we are attracted to the right values, not just making money. Otherwise, you'll be in another group that's buying sports cars and flashy houses. Right, you get what I mean, right? You're here because you and I resonate at some level with similar values. And so we continue to espouse them. We continue to grow with a strong foundation, because you will realize that this is enduring, that you're going to stay here for a long time because of a very strong and enduring foundation. And what I will do because of that is, what I'm going to do is I'm going to work on some of the organization in the Discord, and I'm going to start the series of tutorial. And this is why I am doing these live streams as a test, because once I have this tested, I can start doing tutorials. And that's what I want to do. As I mentioned, some structured tutorials that teaches you about all these jargons that I use. So I'm going to do that for 2026. I want to do it on a weekly basis. So there is going to be weekly lessons because of that. I'm going to look into doing that, and I'm going to do that because the live stream is working well now. I'm very happy with Vimeo. Very happy with that. Famous last words. I hope nothing happens. Don't ban me, please. Please don't ban me for whatever reasons. Right, so I found a nice platform we can use this. And more than just day trading. Because if you read the ebook, it's not about day trading. That will make you the money. I will teach you a strategy why I do day trading. But the money comes from this, the daily chart. This is where the money is. But you cannot make money without money, right? So you need to learn to leverage and increase your rate of returns, which I will teach you as well. So this, I will teach you next year. That's my plan, part of the tutorial lessons as well. And I will start a new channel to talk about swing trading. So I will open up a channel for that. It will be at no added cost to you if you're watching this. No added cost, because I like to bring you along to the new year. But if you're not watching this, if you're watching this later in the year or even next year, I will obviously increase the cost then, because I want to protect this group of people that are with me today. Right? You realize I'm a man of loyalty in a very simplistic way. Are you stuck by me? I will stick by you. If you watch my back, trust me, I will watch yours. So thank you. This is my way to thank you. And yeah, so new implementations next week, and my purpose is for 2026. You have to make big money. All right, I will hold you accountable. I will make sure that you're whipped into shape. Every week, I will check in like that. Right, I'm trying to figure out how to make the chat functions, the Q&A, make it more interactive. So give me time for that. This is only my third live stream. Right, so now remember the last live stream that I had, why we're doing this, right? This is an enduring project. It's not just about trading, not about money, but once you're able to have that skill, once you're able to make that resources or make a living, once you're able to make money, to be able to bless others, we have a long way to go. We have big projects. And that's where the lifetime membership comes in. So I call them lifers. Sorry, can't even spell that now. Right, that's where the lifetime membership comes in, because the lifers are with me for a lifetime. And we are going to embark on projects that's beyond trading. And there's no timeline for this. Therefore, the name Lifers. Some of you may be interested in that. Some of you may not. But trust me to say that there are more benefits to this than the cost of it. It's closed for now. I don't think I want to open it, dilute it too much. But I have to ask the existing lifers, so therefore the meeting with them after this live stream. For those who qualified for this but are still not yet in the program, as I mentioned, you will never be left behind. So trust me, I'm finding a way, sponsorship or whatever. Worst come to worst, I will I will force a way in for this. But trust me, right? We have not started anything official yet, and that's why it's a lifetime membership. It takes time. I'm maybe an honest sharing before I end today. This year has been tough because I was literally on the verge of dying. It's only, well, as I mentioned, right, it's been 1 year since that major surgery that I had because of my brain aneurysm. And, well, in a way, I was told I could die in that year. My recovery was miraculous. God to be all glory. It has changed my life, my perspective of things, and that's why you see things are a little slow this year. But you still see me reporting almost every day as much as I can, because I realize the best thing to give to you is not money, it's nothing else, but what I have very little of, and that's my time, isn't it? Some of you recognize that. Most of you can't. That's fine, because we're strangers on the internet. And I give my time to you, but also to God whom I serve. And so it's my commitment then. I told God that if I were to die, at least I spend my last moment serving you. I think I will survive. It's been a year. Doctor has given me a very, very good prognosis for the future. So, therefore, I'm quite hopeful for 2026. And I'm not too worried about dying now, unlike the entirety of this year. And yeah, I'm looking forward to that, actually, if I feel that I've been given a new life. And that's only because I've chosen to serve. So the more you give, the more you will receive. And that's something I learned this year. So therefore, the live streams, you see, it's a Sunday afternoon, and I'm here with you instead of my family. And so are you. Thank you. Maybe you're watching this with your family. Hello, everybody. But I want to do more. I want to serve more because, yeah, it saved my life in the week. Big plans ahead. So please, where was I? Yeah, Lifers program. Yeah, so we have big things ahead planned. I will be revealing them to you after my meeting with the actual Lifers, which will happen now. So thank you very much for watching. Don't worry, you wouldn't miss anything. See you tomorrow for a very quick. I'll see you tomorrow in the morning. I will prepare you for the day ahead. All right. Lifers, please stay tuned to the channel. I will be sharing the link. Right. If you know other Lifers that don't have the link, yeah, please share it with them. Now, don't worry. This video for the Lifers will be made public after their approval. So, no, you will not miss a thing, even if you're not a lifetime member. Okay, don't worry. There's no exclusivity here. I just want to go by the chain of, well, not command, but the chain of respect. Right, so there's a certain respect I must give others first before I give everyone else. Yeah, so don't worry. You're not going to miss out. There's no secret club here. There's no, wow, pay $10,000, be a VIP. Nah, none of that here. All right? None of that here. Okay, I'll see you later. Thank you very much. Vimeo, how do you stop this? I will find a way. Yeah. All right, see you later.